Hello everyone, a very good evening. Welcome to Oliveboard. So this is the Module A Unit 7 of our BRBL syllabus for the CAIIB Foundation, July 2025. And today we are going to summarize the Unit 7 of Module A, which is the Financial Sector, Legislative Reforms and the Financial Stability and Development Council. So we are going to discuss the financial sector reforms, the reforms in the forex sector, recommendations given by the Narasimham Committee 1, Narasimham Committee 2, and the FSDC, the various wings of FSDC. So we are going to summarize this chapter, which is again an important unit. So let us start. The previous 6 units have already been completed and the videos are there on YouTube, the channel, and if you haven't yet seen them, make sure that you watch them because they're very important from an exam point of view. So make sure to subscribe to the channel so that you do not miss any updates. Now, when we talk about the financial sector or the financial sector reforms, so prior to the banking sector reforms, there were the Indian banking system was seeing repression, extensive regulation, administered or controlled interest rates, then directed credit programs. Then, in this context, the first Narasimham Committee, the Committee on Financial System, was set up in 1991 and it was followed by the second Narasimham Committee in 1998. So let us discuss the recommendations. So the first committee, the Narasimham 1 committee in 1991 was set up in August 1991. Why? To examine all the aspects relating to the structure, organization, functions and procedures of the financial system. So this committee was known as the Committee on Financial System. The whole financial system in India, the structure, organization, functions, and procedures, right? This was actually the first systematic attempt by the government of India at reforming the financial system or the banking system. And it submitted its report when in 19 November 1991. In November 1991. Then there were various recommendations given by this committee. It found that the CRR and the SLR are legal reserve ratios that were required to be kept by the bank were very high, aggregating to 53%. So we can see how high these legal reserve ratios were, because of which the lending capacity of the bank was reduced. It led to a continuous loss in the potential income to the banks, which in turn adversely affected their profitability. Alright, so the committee termed the high SLR as a tax on the banking system and it recommended its lowering. So it suggested that this high 53.5% of the reserves should be reduced, right? Then we also saw it was earlier the banking system had a directed credit program. So the committee was critical of the directed lending to the priority sector and it felt that insistence on collateral, weak post credit supervision and monitoring had to be corrected. Then it also said that interest subsidy being offered in various schemes was again a loss of precious profits to the banks. It again led to lowering of the profits for the banks. Other findings like opening of large number of branches without considering in many cases and potential viability led to the risky behavior. Then the command and control was too high. It was causing problems. Then deterioration of the staff quality due to rapid recruitment and promotion, excessive bank credit to the agriculture and small industry. Again, it led to lower profits. So these were some of the recommendations regarding the financial sector given by the Narasimham Committee 1. Then the Narasimham Committee 2 was termed as the Committee on the Banking Sector Reforms. The first committee basically talked about the various problems, the reasons for the low profitability of the banking sector. Then the second committee talked about the banking sector reform. So this is one of the most important committees. It was set up when in December 1997 to review the progress, the implementation of the financial sector reforms, which were given by the first Narasimham Committee. All right, and it gave its report. It submitted its report when in 1998. It submitted its report in April 1998. So the various recommendations of the committee were regarding the strengthening of the banking system, the capital adequacy measures, the concept of risk weights, higher risk weights wherever required, CRAR, asset quality norms, then how the NPAs have to be treated, interest subsidy, asset reconstruction companies. These were the various recommendations given by the Narasimham committee too. Right? Many recommendations have been implemented. They're still in the implementation stage, and it was expected, like the Surface Act, the Basel III norms, that because of this, the financial sector will see a huge improvement. But then, because of the global financial crisis in 2008, which India had fairly dealt with well, but it was realized that these financial sector reforms had to keep going. It is an ongoing process and more constant improvements are required. So the FSLRC, the F Financial Sector Legislative Reforms Commission, which was headed by the Justice B.N. Sri Krishna, was set up by Ministry of Finance when in 2011 to review, simplify, and rewrite the legal and institutional structures for the financial sector. And this was again a very important commission. It submitted its reports in March 2013. So the FSLRC was set up to review what all is required. So it gave the remedial measures regarding the banking policy, the institutional structure, supervisory system, legislative and technological changes. So removing of the existing financial repression, creation of a profitable financial sector, price discovery by the market, increasing healthy competition, preparing the financial system for increasing international competition, then monetary policy, banking sector, financial sector. All of these recommendations and all of these remedial measures were given by this commission. Now, here, if you see the Narasimham Committee report on banking sector reforms, talked about strengthening of the banking sector, asset quality management, system and methods in banks, structural issues, and technological upgradation. These were some of the important recommendations that were made by the Narasimham Committee too. Then, so what all banking sector reforms were given? Competition enhancing measures, measures enhancing the role of market forces, the prudential measures, institutional legal measures, supervisory measures, and the technology related measures. The technology related measures. These are the different financial or banking sector reforms. Banking sector reforms. So if we talk about the competition enhancing measures, so giving more autonomy to the public sector banks, reduction of the public ownership, right? Disinvestment was there seen. Then transparent norms for the entry of Indian private sector, foreign sector and joint venture banks. Then foreign banks, their guidelines, mergers and amalgamation of the private sector banks and the NBFCs, right? Licensing of the banks in the private sector. Then we saw after the nationalization of the 14 large banks in 1969 and then liberalization in 1999, it was felt that private money market could lead to higher efficiency. So private sector banks like HDFC, ICICI, UTI, IDBI, and some others were set up, right? Earlier it was felt that nationalization would lead to improvement, but later on the requirement of privatization and private sector banks also arise, right? These were some of the competition enhancing measures. Then second are the measures enhancing the role of market forces. So earlier the interest rates were regulated by RBI, they were fixed, but now deregulation was seen. The market forces determine the a lot of flexibility is given in the interest rates, right? So for this the reserve requirement was sharply reduced. Then interbank call money market, auction based repos, reverse repos, then dematerialization and markets for the securitized assets, the targeted long term operation scheme. Various schemes were launched. There were also certain prudential measures that were taken. Prudential measures like the phased implementation of international best practices and risk weighted capital adequacy requirement norms, accounting, income recognition, measures to strengthen the risk management, KYC, anti money laundering guidelines, introduction of the Basel III guidelines. These were the prudential measures, right? Apart from that, institutional and legal measures were also taken, like setting up of the Lok Adalats, the Surfaci Act, then the Clearing Corporation of India Limited, CCIL, Credit Information Bureau of India Limited, CIBIL, the IBC code, the Insolvency and Bankruptcy Code was enacted in 2016. Supervisory measures for better supervision, various steps were taken by RBI, right? Establishment of the Board for Financial Supervision, for the NBFCs, then introduction of the CAMELS supervisory rating system, right? Strengthening the corporate governance, ease, enhanced access and service excellence. And finally, technology related measures like setting up of the Infinet, then the Payment and Settlement Systems Act of 2007, RTGS, NEFT, ATMs, mobile banking, internet banking, then use of artificial intelligence, machine learning, robotics, and various other steps were taken and still are being taken for the technology enhancement, right? So these were the banking sector reforms. Then reforms were also taken in the financial markets, right? In the financial markets, like there were the money market reforms, so for providing better opportunity for the market players so that they can access the short term funds, liberalization methods measures were taken, the interest rate swaps were introduced, forward rate agreements, then repo market, the scope of repo market was enlarged. So for the repos, what step was taken? With step towards making the call market a pure interbank market, turnover progressively switched from the call money market to repo and CBLO market. Then a part of the reforms, the concessionary financing was eliminated, and with the introduction of market auction system and phasing out of the automatic monetization. So these were some of the financial market reforms. The financial market reforms. Then regarding the government securities market also, the GSECs, the SDLs, treasury bills, cash management bills, they constitute the government security market. These are auctioned by RBI at scheduled frequency. Also, the primary market witnessed a significant movement away from the controller of capital issues. Because it led to a lot of control, imposing primary issuance of the sub-market rates. But now we are moving towards free pricing and book building system along with mandatory disclosures. So these are the financial market reforms. In the capital market also, the many other segments in the capital market also, or we can say in the secondary market, the corporatization of exchanges, screen based trading system replacing the open outcry system, right? Rolling settlement replacing the 14-day settlement cycle. These were the steps that were taken in the financial market. So we have seen the banking reforms and the financial sector reforms. Then certain reforms were also taken in the forex market, like the adoption of managed floating exchange rate system, shifting from the fixed one to a managed. Then rationalization of the structure of the market, introduction of a variety of products such as options and swaps, gradual move towards the capital account convertibility, and infusion of stability in the market. With the LPG reforms, the forex market reforms were also taken, making the Indian banking system more liberalized. So, authorized dealers were permitted to initiate the trading positions. Banks were also permitted to fix the interest rates on the non-resident deposits, right? Then various participants in the foreign exchange market, including the exporters, they can now avail the forward cover, enter into the swap transactions. The foreign institutional investors and the non-resident Indians were also permitted to trade in the exchange traded derivative contracts. They were permitted to the foreign exchange earners, they were permitted to maintain foreign currency accounts, the EEFCs, right? So these were the steps taken in the forex market. Before these reforms, the foreign exchange market was virtually non-existent in India. But now exchange earners, they are seeing more flexibility. Exchange rate is flexible and market determined. Capital account is also effectively convertible for the non-residents. So the forex market saw liberalization measures. Then we have the Financial Sector Development Council. The Financial Sector Development Council was constituted when in December 2010. Now we have various regulators for the various segments of financial sector like RBI for the commercial banks and NBFCs, SEBI for capital market, IRDAI for the insurance, PFRDA for the pension fund. Now the primary objective of FSDC is to strengthen and institutionalize the mechanism for maintaining financial stability, promoting the financial sector development, and enhancing the internal regulatory coordination. Right? So this internal regulatory coordination, how is it maintained? Because the FSDC brings together the heads of financial sector regulators. Now let us see a very important topic. The chairman of the council is the finance minister, and who are the members of the FSDC. Members include the heads of the financial sector regulators, that is the RBI, SEBI, IRDAI and PFRDA. Then the finance secretary is also a member. The secretaries from the Department of Economic Affairs, Department of Financial Services, Revenue Department, and the Ministry of Information Technology (MITI). The chairman of the IBC, the Insolvency and Bankruptcy Board of India, and the chief economic advisor. This is a very important topic. You should remember who all are the members of the FSDC, of the council, and the chairperson of the council will be the finance minister. All right. One more very important thing, it is not a statutory body. It is not a statutory body. All right. Now, the FSDC was set up in 2010, a body consisting of all the regulators and the Ministry of Finance. It is the highest forum in matters relating to financial stability, and it is chaired by the Union Finance Minister. Now, what are the responsibilities of FSDC? First, to ensure financial stability in India, in the nation. Then the financial sector development, the macro-prudential surveillance of the economy, financial literacy and financial inclusion, and interregulatory coordination. These are some of the important responsibilities or functions of this council. Now, the FSDC has certain wings, or we will say the subcommittees or wings of FSDC. First, we have the FSDC subcommittee. FSDC subcommittee. So, in terms of functional responsibility, this committee is headed by whom? By the governor of RBI, right? And it meets more often than the full council. The full council, all the members, more often than that, the subcommittee meets, right? And all the members of the FSDC are also the members of the subcommittee. Then we have other wings like the Interregulatory Technical Group. The name suggests the IRTG was set up when in 2011. The IRTG was set up in 2011, and the name suggests it is the Interregulatory Technical Group, right? So for group, this meets for the financial sector regulators and coordination, providing inputs to the subcommittee for the systematic financial stability. These are the functions. Then we have the technical group on financial inclusion and financial literacy. Again, the name suggests this group works on financial inclusion and financial literacy. It was also set up in 2011, right, for the financial stability, and it has representatives from all the regulators. Then we have the Interregulatory Forum for monitoring the financial conglomerates. Again, the name suggests the financial conglomerates or FC. So, oversight and monitoring. So, here this will be this interregulatory forum will act as the lead regulator, right? And it is headed by the deputy governor of RBI. Other regulators are also the member like the executive directors of RBI, SEBI, IRDAI and PFRDA. Then we have the working group on resolution regime for the financial institutions, right? If any financial institutions they face any type of disputes, so for their resolution, right? So, to examine the existing resolution regime framework for the entire financial sector, identifying the gaps in the national resolution regime, these are the functions. To recommend changes in the legal framework to facilitate the required resolution, including cross-border resolutions. Then we have the crisis prevention and monitoring framework, again in situations of crisis, right, in the financial market. So to take necessary steps to mitigate the impact of financial markets as well as the real sector. These are the functions of the CPMF, crisis prevention and monitoring framework. So generally giving policies for taking action on the evolving risk or vulnerabilities in the respective areas. Then we have the macro financial monitoring group, now macro level, discussing the emergent issues, again based on the information which is derived from other areas, the domestic developments, global developments, all of these are the functions. And finally we have the early warning group. The early warning group, it was set up when in 2012, and these regulators, they coordinate the response of the government of India or regulators in the time of a crisis situation, in the time of a crisis situation. So all of these subcommittees, all of these committees under the FSDC, they have their respective roles to play for the financial sector regulation and monitoring. And that is all. This these information, the topics that we have discussed, these are the most important from this unit 7. And with unit 7 we have also completed the module A. The module A, which contains the 7 units, have been done. Tomorrow, starting tomorrow, we will begin with module B, which is very important, or I will say most important from the exam point of view. All right. So make sure that you revise this chapter, keeping in mind these topics, the summarized video that we have seen. If you want to have the detailed explanation, if you want to study this chapter in detail, then you can go through the courses that are available in the description box. You can also find the PDF that you can download and study. You can use it for your revision. So that is all for today. Thank you for attending. I hope everything was clear. Don't forget to like the video and subscribe to the channel. I will see you tomorrow with the next chapter. Good night and all the best.